Well, hello there. Welcome to Breakout Trading Answer to the show, where we talk about all things breakout trading. And joining us today, of course, is breakout trading specialist, hedge fund manager, and all-round good guy, Tomas Nesnidal. Welcome, Thomas.
Thank you very much. That was quite an entrance. Thank you, Andrew.
Well,
I'm very happy to be back.
Yeah, excellent. Well, I wanted to make it very energetic today because it's I guess the topic of the show is how to make
Energy.
breakout trading work in energy. So I'm bringing the energy.
Yes.
I've had my coffee and I'm ready to go.
I have my coffee here. Iced coffee. Iced coffee. Yeah, Starbucks. Thank you, Starbucks.
Excellent. So the chat is on fire already today. G'day, Mark. Hey, Olga. Welcome. Good to see you here. Martin or Mirko and Rob. The same old familiar names and faces. Welcome.
Hey, guys. Welcome back. Great to have you here.
Yes, exactly. So as I mentioned, we're going to be talking about the energy markets today. And before we get started, actually, I'm interested to know in the chat if, what are your favorite energy markets? Are you trading energies? Let us know. It'd be interesting to find out. I know some people here are going through the Breakout Masterclass Accelerator at the moment, building strategies. So maybe they're not trading those ones live yet. Oh, Dave's here as well. And hey, Martin.
Hey,
so
Dave.
let us know
Hey,
in the
Martin.
chat if you're trading energy markets or if you have some favorites. I'm going to share my favorite in a second. I know Thomas has got a lot of good stuff to share with us about the energy markets today, and it's very timely, isn't it, Thomas? Considering what we're seeing right now.
I mean, what can be more timely? And I'm so excited about this one for one single reason. I think this week two things happened. The first one, all of a sudden, COVID disappeared from media, like it's gone. Like it's gone because we see the Russian case everywhere right now. So COVID disappeared. And second, and that's related, all of a sudden it's not a crypto that everybody talks about, it's the energies. Hallelujah, what a change. So we have two new news shifts this week, and energies are super timely. And believe me, this is a coincidence. I didn't plan it. When we started planning the next live show, the thing with Russia was still not happening. So it's a coincidence, but I believe it's a good one.
Yeah. So we've got some more hellos in the chat here. Got a couple of new names I haven't recognized before. Sean, g'day, Sean. There's a Giorgio. G'day, Giorgio. Valendra, I think I've seen your name here before. And John, we know John and Dan as well. So welcome, everyone. Rob says he doesn't trade energies yet, but crude oil is all the rage lately, I see. And I think we're going to be talking about crude today. Crude oil, by the way, is probably my favorite energy market. So it's very dear to my heart.
I knew you would say that. I wasn't sure if you say crude oil, but I knew you would say something with energies. Because quite frankly, I think for breakout traders, for all of us, energies are our favorite market sector, probably, I would assume, because we're all making most money in energies. And that's something I'm going to talk about tonight as well.
Yep. All right, so before we get into the chat about energies today, I just want to remind people that this is the second episode in this new series we're doing on how to make breakout trading work, and each episode we're focusing on a particular market group or sector. So last show we did indexes, which was really a good show. Thomas shared a lot of great info on. We talked about extended sessions. We talked about day trading versus swing trading, cross-validation, market internals, and we even had a strategy review from Mark. Mark submitted a strategy which we went through. So if you're into index trading or want to get into that, go and check out on the YouTube channel how to make breakout trading work in indexes. Now, as I mentioned today, we're going to be talking about energies. So, Thomas, where do we want to start today for the energy markets?
If you, Andrew, please could bring up the slides.
Oh, yes,
and
I can do that.
Because we have 5 points, and I'm going to cover each point separately because we have a lot of stuff to talk about. So let's start with the first one. Why energy markets? And I can tell you just one thing, and Andrew already pre-sold that a little bit when he said that crude oil was his favorite market. But energies are the markets where you make serious money, period. If you take all commodities, if you take all future market sectors, and if you mix it with breakout trading, energies are the sector where you can make serious money. And I think Andrew will probably confirm that, right?
Yep. It's a great market.
These are also
great markets.
Great markets, all of them. Great markets, but also some of them are big markets for big boys. I will not lie about that. Like crude oil, we're all seeing what crude oil is capable of. But I also think, one thing when we talk about why energies, and we have to, I don't know even how to emphasize this, but everybody nowadays is about crypto, and I'm sick of crypto. Like seriously, I'm sick of crypto, because first of all, it's not trading, it's gambling. It's just going up and down. It's just, I don't get it. The whole hype, to me, is just hype. Second, we're algorithmic traders, and we work with probabilities, and we work with statistical analysis. We work with sample size. We work with stuff which makes sense and are mathematically and statistically sound. And for that, we need a sample size. And sample size needs to be over a longer period of time. And we don't even have enough of data on crypto. We have just a couple of years. It's nothing. So I can't even imagine myself creating a serious trading business on a crypto currency. But we have all this for energies. Like we have tens and tens of years of data. We have high quality data. We know that energies markets can move like crazy. We know that energies markets are one of the most profitable markets ever, period. We know we can make a lot of money on energies. We have a choice of different energy markets, and we know that energy markets have been proven with breakout trading for dozens of years. It's been working with breakout trading for a long time. So to me, choosing energy markets are way better, way more professional, and way more rational choice than choosing crypto. And you still can get a great effect. And that's why I would say, why, if somebody asks me why energy markets, I say for that reason, because it's a proven whole market sector. It's been here, it will be here. It can make a load of money. It always moves somewhere. We have a load of data, a huge data history of high quality data that we can backtest on and create strategies on. And it works like magic with breakout trading strategies. Do we need any more reason to go with energy markets?
That's pretty good to me.
Oh, I have one more. And it's not that difficult to create a good breakout strategy on energy markets. Actually, energy markets are one of the easiest.
So if you had to pick between energy and indexes, if you had to pick just one, which one would you pick?
That's a tough one. I like both. It depends. If I would be starting, maybe indexes, because energies can get way more volatile and you need bigger account. But if I would already have some experience and reasonable account, I would go with energies, because I definitely can make more money on energies.
Okay. All right. Well, I think you've sold us on why energy markets are such good markets to consider. Which energy markets do you think? Well, actually, why don't we explain which energy markets we're talking about?
Yeah, actually, if I can ask you, Andrew, please bring back these slides.
Yes.
Yes, because we have here this second point, which is, if we can move forward one slide, we have this second slide, which is which energy markets. And now let's move one more slide forward, because I prepared for you this chart. Yes, and that explains it perfectly. So this is a database of our high quality robustness level 3 strategies in our hedge fund. All of them are tradable strategies. Is over 1,000 or something like that. It's like a lot of strategies across all reasonable futures markets. And within this database of high quality breakout strategies, by the way, all of them were created based on the Breakout Strategies Masterclass framework, exactly the same framework. There's no any deviation from that. So if we have a look in our database, we have 259 energy strategies, which is a lot. Like we have a load of breakout strategies on energies. And one of the reasons is because, as I said, it's not difficult to create good, reasonable strategies on energies. And basically we have 1, 2, 3, 4 very strong energy markets, and we trade all of them. And I would suggest really building strategies on all of them as well. So of course we have crude oil. On crude oil we have 51 trading strategies right now, if I look well. And crude oil is the most volatile. This really is a market. This is a market for big boys, because you can make thousands and thousands and $1,000 in a single day, but you also need to operate with a pretty high stop loss, about $2,000 as well. So it's volatile. It's you will have ups and downs, but that's where you can make a lot of money. And I really do like crude oil because it always moves. It's got high liquidity. You can trade it during the night. It's a great market for serious traders, but it's more advanced market already. Then we have natural gas, NG. We have 102 strategies on natural gas. So natural gas is another market where you can find a lot of breakout strategies. You can see it's our 1, 2, 3, 4, fifth or sixth most successful market. And again, natural gas is a mover. It moves. It can make you a lot of money. There's a good volatility, a good volume. It's very tradable, and it works like magic with breakout strategies again. So natural gas, it's a very good one as well. Although, don't get me wrong, with both crude oil and natural gas, you will sometimes experience quite a roller coaster. You'll have a little bit of a headache, because these markets can be super rewarding and super frustrating as well. And then we have heating oil, HO, and then we have RB. Andrew, this is a very difficult English word for me. It's gasoline, but there's one difficult English word in front of that, which I don't remember.
In front of gasoline. I just call it gasoline.
yeah. Let's just call it gasoline. It's not the complete. It's two words, and one of
it does
them
have a longer name. Yeah, I'm trying to remember what it is.
Yeah, and it's quite a complicated English word that I do not remember. I never was able to memorize that, but it's not important. So that's gasoline. That's the last one. And on both HO and RB, it's really simple to create a good breakout trading strategy. It's a good market, although it's a little bit tiny market compared to natural gas and crude oil. Both of them, RB and HO, are tinier markets, so you need to be aware of volume. You need to have a good average trade, because you might have a bigger slippage. So that's something to be careful about. However, all these four markets are great energy markets. All of them are tradable, work very well. I would recommend all of them, and we do trade all of them in our hedge fund. And also natural gas and crude oil were one of my very first breakout strategies ever. So when I started with algorithmic breakout trading, I started with a couple of indexes, crude oil and natural gas. So also historically, I have good memories. You need to be careful, though. I would not recommend starting with a portfolio consisting of indexes and energies only, because these two sectors, they have tendencies to experience times of high linearity, which means when things go wrong, they usually go wrong on both of these sectors at the same time. So it's always important to be diversified also across other sectors and not rely on indexes and energies only. Otherwise, it can be quite challenging, trading just these two future sectors.
Yeah. I think out of those four, my favorites, well, crude oil is my favorite one, and one of the reasons for that is that you can use extended sessions, which I think we're going to talk about a little bit later. And then heating oil, actually, I've had a lot of good results on the heating oil, so they're my two favorite energies out of these four.
And I also think that I think that a beautiful thing about all these markets is that you'll never get bored, that you have trades, you have energy trade nearly every day. Like this is one of this kind of sector which is heavily traded, and you have a lot of signals. You know, sometimes when I have a look at markets like TY or even cotton, lean hogs, these markets can be without a trade even 2, 3, 4 weeks. But I barely remember any week during which we wouldn't trade any energy. We wouldn't have any energy trade. It's very frequent, very high frequency of trading.
Yeah. All right. So that is which energy markets. Now, should we talk about particular trading styles here?
Yes, let's move on.
I think that's on the next slide. Let me go.
Yeah.
Ding. There we go. Day trading or swing.
So should you day trade or swing trade these markets? And the answer is pretty much on the next slide, and I'll comment on that slide a little bit. So the truth is that for day trading, it's quite complicated to find strategies on energies, except for crude oil. So this is summary of what we have in our database in our hedge fund. Again, everything is based on Breakout Strategies Masterclass and framework. And for day trading, we only were able to come up with crude oil with reasonable day trading strategies with crude oil. The good thing about these day trading strategies on crude oil is that it's such a big mover that even with day trading, you should not struggle with a good average trade. Usually, you would like to have an average trade on day trading strategies at least around $70 to $80 on average per trade. With crude oil, I think it's very reasonable to expect anywhere between 100 to 120 on day trading basis, which is quite a high average trade. If you have some experience, you already probably know that. So that's the one where I would focus on day trading. And it's also important to mention that you will need to experiment with extended sessions, which is something I'll talk about. But we do not use regular trading sessions, regular trading hours anymore. But then in swing trading, we have for all these other four markets, including crude oil. That's quite interesting. You can create a good crude oil day trading strategy as well as swing strategy, and when you combine them together, they can have a pretty reasonably good correlation. So even both are on crude oil, you can get a good quality correlation among the same market, but different trading styles, day trading and swing trading. Now, when I say swing trading, we close all our swing trades on Friday. So our longest lasting swing trade can be for 5 days, since starting Monday, closing on Friday. We never hold position overnight. That's just our philosophy in our hedge fund. We just that is what it is. That is what we agreed on. Of course, you can stay overnight. There's no reason why not, except for the risk of over weekend gaps. So sorry, not overnight, over weekend. So you can keep your position over the weekend, but we close them on Friday. So that's our view of, or our style of swing trading. Then when I asked my hedge fund team to give me some data to prepare this presentation, of course, I asked them, how would you rate developing swing strategies on these four markets? And they immediately said, easy and strong, which means by strong they mean like they have strong results. We're having strong results when looking for strategies on all these 4 markets. So again, this is really great combo, because you can make a lot of money on these markets, and at the same time these markets are not difficult to develop a good high quality breakout strategy on. The only caveat is that you need to be reasonably capitalized, because these are definitely not baby markets. These are definitely major market sector.
Yep. We've got a question in the chat here from Olga. Let me put this up on the screen. Actually, I'll switch the slide off for a minute. We can come back to it. Thanks for the question, Olga. Is the 100 to 120 average trade for crude before or after adding transaction costs?
This is before. So on crude oil, your transaction cost, it depends on the volatility. On average, it will be about $30 round turn. So after that, you will be somewhere between 70 to 90, 70 to 100, something like that after transactional cost, which is still a good average trade. This is a volatile market, and it's very common to have slippage on crude oil.
Yeah. What about the other markets? What can you say about slippage in, for example, gasoline or heating oil, natural gas?
Yeah, you need to be ready for slippage on all these markets. These are markets with slippages. Actually, coincidentally, I got from my hedge fund team. I had a slippage report for 2021 for the entire year. So I went through it, and actually, in our case, but we have a pretty complicated infrastructure. Even RB and HO, which are tiny markets, the slippage was quite reasonable. But you definitely, for RB, HO, you need to be very conservative. And usually I say in the masterclass, consider 1 tick slip on entry, 1 tick on exit. But I would say that on heating on RB, just consider two ticks on the entry and 2 ticks on the exit. So 4 ticks slippage round turn. However, if you will aim for swing strategies, you should definitely have no trouble to develop a strategy with good enough average trade to work very well even after these higher than usual transaction cost.
Yeah. Okay, thanks for explaining that, Thomas. So that was day trading versus swing trading. So let me put the slides back up. We're going to get into one of my favorite things to talk about in energies, time sessions.
Yeah, time sessions are quite essential with anything nowadays, because it's kind of a hack. Like, you can really boost your trading overall by trading right time sessions. And again, if we can move to the next slide, please. I prepared here a summary of the exact time sessions that we use in our hedge fund. So first of all, we need to understand that there is something like regular trading hours, RTH, which are in exchange time. And normally these markets, the regular trading sessions are meant to be 9 a.m. to 2:30 p.m. of New York time, because these commodities are traded in New York. However, most of these markets are pretty tradable overnight, and especially crude oil. And exactly, I understand why Andrew said that he likes this market so much because of overnight session. I totally get it, because crude oil, like we're used to think, we're pretty much thinking in terms of the US trading hours, because that's where the main exchange is located. However, we have to bear in mind that that especially crude oil, it's being drilled in other countries like Saudi Arabia and Russia and all the other countries which have quite a noticeable time shift compared to the US, meaning that when you guys sleep in the US, people in Saudi Arabia or Russia, they might be awake and trade crude oil on their own markets or here in London, in Europe. So the point is that this makes crude oil very tradable, even overnight. And I mean, by very tradable, I mean we can really have significant movements even during the night. So especially crude oil is one of the markets where we can definitely say money never sleeps, because in crude oil it does never sleep. Thus, we can really go way beyond the regular exchange time. And from our experience, crude oil is very tradable from 3 a.m. US time, New York time, till 5 p.m., which, as you can see, it's a completely different. It's a very expanded session compared to the regular trading hours. And I would even encourage everyone to work with these extended time frames, because I think this is where the goal really lies. And just by extending the sessions, you pretty much double your opportunities, because it's not unusual that the overnight movement is as big as the movement during the day. So it's sometimes like you have the double potential by expanding this session. So this is the session we use in our hedge fund, 3 a.m. till 5 p.m. Although we mostly we limit entries during closer to exchange time. We do allow to stay to be in the position overnight, and we put our profit targets and stop losses there as well. So that means we usually can enter anywhere between 8 a.m. and 3 p.m. New York time, but then our exits, both on winning and losing part, can be triggered anytime between 3 a.m. and 5 p.m., which means that sometimes we can, for example, exit with a pretty big profit target over the night, because there can be a big movement over the night. So that's what we do on crude oil. On natural gas, we trade. We start trading 1 hour earlier. We develop strategies 8 a.m. to 2:30 p.m. and HO and RB. We either stick with the regular trading hours for now, or we expand it a little bit as well. On HO 8 to we start 8 a.m. and finish 2:30 p.m. and RB 8:30 till 2:30 p.m. So these are exactly the times that we use. And it's quite important also. One more thing that I want to mention about crude oil. This whole 3 a.m. till 5 p.m., you can consider this as a day trading as well. So you can create, for example, a strategy which can be conditioned with entries anywhere between 8 a.m. till 3 p.m., but the actual exit can be up to till 5 p.m. So normally when you use end of day exit in TradeStation, it would exit 2:30, but you can create your own time exit with time condition that this exit would be 5 p.m. And this way you can create completely different generation of day trading strategies on crude oil, which again give you more potential, thus higher average trade.
Yep.
So that's my experience. Maybe if you have some experience to share as well, Andrew.
Yeah, that last point you made about crude is exactly how I trade it. So use an extended session, 3 to 5 or something like that, and then use it as day trading. And the extra couple of hours you get at the start there really helps with the number of opportunities you have for trades, and also for average trade as well. Really gives it a boost. So I recommend people try that. It works pretty well. And then the rest are really good for swing trading. Yeah. So we got a couple of questions in the chat here, Thomas.
Great.
So I'll just hide the slides for a moment. So first one, let's look at this one from Mark on average trade. Speaking of average trade size, should you be wary of large average trade sizes like $200 or more?
you should be happy about large average trade, not worried. Quite the opposite. You should be, the only thing is that you need to have a good sample size, because
Yeah.
sometimes you can have very high average trade, but it's due to small sample size. So you can have just, I don't know, 100 trades for the last 10 years, and that can produce large average trade. So as far as you have approximately at least about 50 trades per year, so that means about 500 trades on last 10 years, then you should be really happy for every bigger average trade than that. And I can tell you that on a crude oil, you definitely, especially for swing strategies with this sample size, you can have 300, even you can have even more than 200. You can have $300 average trade. That's the beauty of energies. It's quite common.
Yeah. Thanks for the question, Mark. Here's a question from Sean. G'day, Sean. Roughly how capitalized do I need to be to trade energies mini contracts?
Many contracts. I don't trade many contracts. I don't know what the size is, so it's hard for me to estimate.
Yeah.
So I can't answer that because I'm not familiar with many contracts on energies.
Yeah, I know for crude the mini is half the size, isn't it? So you've got CL, which
How
is I
the
guess the
size?
full, and then the mini is half. I think it's QM in TradeStation is half the size, and then you've got the micro, which is I think MCL is like a tenth of the size. So I don't know about the other markets. I don't
Yeah, so in
trade
that
the
in that
small
case,
ones.
if it's the half, so on crude oil, as I said, it's a volatile market. So you can be expecting higher drawdowns, even as high as $10,000. So on mini, it would be $5,000. So it depends how much of a drawdown you can stand. So of course you should have a portfolio. It's a quite complicated question because you always need to think in terms of portfolio, and with portfolio you will minimize the drawdown and will increase the net profit drawdown ratio. But still, if it's half size, we still are talking about building portfolios with these minis, including mini crude oil. I would say at least about $25,000 if you want to create a good, reasonable portfolio and think about it as a reasonable business. It's definitely not. I don't think that energies are for 5K account, unless you use micro. I don't know how big micros are, but of course with micro it's different. With
Yeah, I think the
micro, there.
micro for crude is a tenth of
Okay,
CL, but I
then
don't think
then
there's micro
definitely.
in any. I don't think there's micro in any other markets. Although I don't keep up with the micro contracts that are coming out, so I might be wrong there. But I think we're still limited to just crude in micros.
I'm confident that sooner or later we will see micros on all of them, because micros are really expanding every year and more are coming up, and energies are really very popular. So if you use micro, you need a couple of $1,000s. It's not a big deal. You can definitely start with a pretty small account with micros.
Yep. Oh, one other thing actually you should consider for capitalization in energies is um, sometimes the margins get changed, especially in periods of high volatility. So if you like to trade hot, you need to be careful of that because you might get a margin call.
That's a good one. Yeah.
So what's the margin at the moment? Has it gone up?
I didn't
They have
check, to
done it
be
in the past,
honest.
haven't they? Yeah, I haven't checked that either. So just something to keep in mind. Got a question here from Mirko, which we kind of touched upon a little bit, but you might want to add some more here, Thomas. If undercapitalized, if undercapitalized, I'm guessing these should still work with micros.
Right. Yeah. Yeah. This is, yeah, absolutely. Micros are really great. You can have a lot of fun with pretty small money. So yes, I can
Yeah.
recommend micros if you don't have sufficient capital.
So then, if someone wanted to actually trade on micros, how would they go about developing strategies for that when the data is limited?
Uh, So they need to create a strategy on full size or mini size, or the e-mini, because it's same, like there's pretty much 100% correlation. And then for micro, you just need to adjust stop loss accordingly. So for example, if you develop on a big one, big crude oil, and that strategy works with $2,000 stop loss, then you can put it on micro with 1/10, that would be $200 stop loss. But it's same market, it's just different size, it's just different fraction. So you still can use data from the big market and then just adjust the stop losses and profit targets so they reflect that 1/10 of the micro market.
Yep. Okay. Thanks, Thomas. Just taking some notes. All right. So that looks like we're done with session times. So basically, crude oil is a good market to do extended or longer sessions, and there we can see in the table some alternative sessions from Thomas's hedge fund, which have been quite fruitful. So I assume you want me to go to the next slide?
Yes, that's the last one.
Yes.
Yes, exits. So first of all, as I said, we don't have to think about entries that much because it's breakouts. Like if you studied some our material, like the built in mini breakout strategies fast course that we have for breakout strategies masterclass, it just breakouts in general. These markets are great for breakouts, so we don't have to think that much about entries. We just use my breakout model, these breakout entries. However, how do you exit? And that's a little bit more complicated one because we have a plethora of options. And what we realize, what works best what works best for us is following. So first of all, as I said, we use end of week exit. So we exit our strategies, all of them on Friday, and in energies, this one seems to work pretty well. And then of course, we can have plenty of different exits. We can have bars since entry and technical analysis exits and stuff like that. But for us, the best one, or the one that seems to work best, is just using stop loss and profit target. And we use both dollar-based and average true range ATR-based, volatility-based. So with most energy strategies, we use a combination of exit on Friday, plus stop loss, plus profit target. The profit target can be defined as a stop loss profit target. Same for as an US dollar stop loss or profit target, or ATR multiple of average true range. That means volatility stop loss or profit target. And what really works well for us is setting these stop loss versus profit target as a fixed reward risk ratio. So we usually set somewhere between 1.5 to 2.5. So on average, whenever, let's say, we set a $2,000 stop loss, we set a $4,000 profit target, which gives us 2-to-1 ratio. And not always this one is fulfilled, because sometimes we just exit on Friday being in half of that distance toward either stop loss or profit target. But this reward risk ratio, fixed reward risk ratio, seem the best for us in our hedge fund. So we pretty much stick exclusively with these, and we do not overcomplicate it. This seems to be really sufficient. So our exits are pretty simple.
Yeah. So if you're using volatility stops and profit targets, when we go through periods of high volatility like we've got right now, especially in crude, do you make any adjustments to the strategies or how you manage them, how you trade them, or not? Because that expansion in volatility can have a big impact on performance, right?
Yeah. So yes, of course. So we still, when we use volatility stop loss, we still encapsulate it, or let's say encapsulated is not the right word. We cap it, like cap it, or cap it.
Cap, yeah.
Cap
Put a
it.
limit on it.
We still cap it. So we still, because that's a great point. In with the ATR, all of if we transfer or calculate that ATR, if we express it as a US dollar, so that means if we take the ATR as a number of points and we multiply it by point value, it can fluctuate. The stop loss can be anywhere between $500 to, let's say, even $5,000 per trade based on the current volatility. So we put cap. We do the same thing that I share in the Breakout Strategies Masterclass. The way we do maximum adverse excursion analysis on traditional US dollar stop loss, we do this analysis on ATR stop loss as well. So we have a look on this fluctuation of stop losses, what is the range, and then we see statistically that, let's say, that 5,000 stop loss was an exception, one case of 200. So we cap it by additional dollar-based stop loss, which of course is higher than normally. It can be 3,000, whereas normally could be 2,000. So there is some cap on that, but it's this combination just as a protection, because of course we do not want to go into a trade with $5,000-$6,000 stop loss. That's not the possibility.
Yeah. So then, are you saying then you would? So that question was really about the ATR stop loss and profit target. But if you've got like a fixed dollar stop loss, which is one of the exits you just mentioned before, a stop loss of, I don't know, $600 or $700 in crude might work really well when the market's quiet. And right now, it's probably going to be a little ineffective. So do you adjust those ones as well? Do you make them larger, or how do you manage that?
Okay, I understand. Yeah. Well, overall, our stop losses on crude oil are mostly about $2,000. We hardly have smaller. So we do have, and we keep these stop losses for years already. So we can have a few strategies where the stop loss can be a little bit lower, like 1,700 or 1,800, or a little bit higher, like 2,500. But this so far seems to be good stop losses for a lot of different kinds of volatility. So we're not touching these. Although I have to say that last couple of weeks or last couple of days with this Russia-Ukraine crisis, we experienced quite a few stop losses in a row on crude oil. So of course it's frustrating when you get 2,000 stop losses in a row. That's $10,000. But we also experienced trades plus 6,000, plus 8,000. Last week I had plus $10,000 per one contract on crude oil. So that's the other side of the coin. So we haven't adjusted them yet.
So what do you think? What do you think the impact of today's markets is going to have on backtesting strategies and doing like the maximum adverse excursion analysis in the future?
That's a good question. I think one of the, if we want to really make sure we're doing a good job here, one of the things I would recommend is going further into the history and use backtest with crude oil, backtest longer than that 10 years, because that 10 years would give us just since 2011 or 2012. But right now the crude oil prices today, the last price was something like 120 or about 130. We've been there in past. That's nothing new. We've been 186 was the highest, or 187. So that's nothing new. In fact, for a long time, being about 110, 120 was a pretty normal price. So this price doesn't preoccupy me much. It's a price that we had in past. We had also high volatility in past. If you scroll through charts, you see it. But if you really want to make sure you're ready for volatility like this, you can always take your trading strategy and also assess it on longer data than just 10 years of history. But if I believe that in the last 10 years, especially on crude oil, we've seen it all. I remember how we went from 180 to $30. I think it was something like 26 or something like that. Not only that, we went to minus 40, right? Like we went to negative values, minus 34 or something like almost minus 40. So thanks God, especially crude oil is very, very rich in its historical movements and scenarios and possibilities, and it's all embedded there already. At least this is what I believe. So as I said, 130, we've been there. I was trading when the price was 180, and that was wild. That was really wild.
Yep. Yeah, that's a good point, Thomas. Thanks for sharing that one. So I've just been scrolling up the chat, and I think I've got all the questions. If I missed your question, please repost it in the chat, or if you've got any new questions. And while we're waiting for that, Thomas, I think that was the last slide, other than our quote of the show, which we'll get into in a minute. So I might just do a quick recap of what we've talked about. And then if there's no questions, we'll move on to the quote of the day, or quote of the show. So first of all, we started off talking about why energy markets, and you even talked about why it's better than crypto, which is probably going to get some people upset. But anyway, it is what it is. We then
That's
talked
my
about...
opinion. That's my opinion.
That's okay. And then we talked about which energy markets. We had a look at some of the results that you've got in your hedge fund. So thanks for sharing that. It was really interesting to see. We talked about day trading versus swing trading, which market is best for day trading and what are best for swing, which is really handy to look at. We also talked about slippage in there as well, which was great. Then we looked at time sessions, and you shared some really good ideas on which markets and which time sessions we could use based on your hedge fund research and data, which is great. And then we talked about exits. So how did I go? Did I miss anything there?
It was perfect.
I think I got it. I've been taking lots of notes today. Look at all these notes. I can't wait.
And considering you still have like 6:30 a.m. or something like that in Australia, that was perfect.
It's 7:30 now, yeah. So yeah.
Okay.
All right. So I don't see any more questions in the chat. So maybe we can move on to the quote of the day, Thomas. So let me get the slide up, and you want to do the intro, and when you're ready, I can flick it. Or do you want me to flick it over now?
We're talking about energy. So obviously I picked a little bit playful quote for tonight, and you can reveal it now. So the quote says, "Energy flows where intention goes." And saying that, I wanted to suggest definitely give some intention to energy markets and put some energy into these, because I really believe that these are the energy category. Energy sector is a must for every serious trader, and I cannot imagine myself trading without energy sector at all. Like, I love this sector. Sometimes I hate it as well, because sometimes it gives me a lot of headache. But it definitely it belongs to a professional portfolio, and the opportunities there are really, really great. So definitely give it some intention.
Yeah. So you're loving it right now or hating it?
I'm so used to energies already that right now I'm quite like, I've been there. All right, it's quite neutral. It's quite neutral. Couple of years ago, I would be probably like on a roller coaster. Right now, I've been there, especially with energies. Especially, I told you already, that was one of my first breakout strategies were crude oil, natural gas. So I have such a rich experience with these markets that nothing surprises me there anymore, and I'm used to these roller coaster markets in energies like this. So I'm very neutral right now. I'm like, it is what it is, part of the game. I'm not surprised. It's our choice to put a lot of money into energies as well. These markets are great. Let them do what they do right now.
Yeah, excellent. All right. Well, thanks for Yeah, the discussion on energies today, Thomas. Thanks for sharing some of your hedge fund research in there as well, because it's not very often we get to see behind the scenes on hedge fund research. So thanks for sharing that. I'm interested to hear in the chat, just as I start wrapping up here, what was your favorite insight from the show today? What did you really find value in Thomas has shared? So let us know in the chat. And then while we're waiting for that, just a couple of things. So please, first of all, give us a thumbs up for this video, ding, and hit subscribe on the channel as well. We've started this month releasing almost every day. We don't do it on Sundays, but every day of the week plus Saturday is we release a little short 1-minute video clip of just a little tip or a trading tip or something in there, and that's all being published on YouTube. So if you click on the subscribe and bell icon, you can get notified of that when we release them. So there's a lot of little tips in there which might hopefully help you with your trading and could save you thousands of dollars and keep you away from heartache. So yeah, give us a thumbs up for this video and subscribe. And if you have any trading questions, or if you want to submit your strategy for review, which we usually do on the show, we didn't get time for it today, but yeah, just email us support@bettertraderacademy.com and let us know your question, or you can turn up live to the show and submit your questions in the chat there as well. So, Thomas, did you have anything to add to that?
Not really. If we have some question, I'm happy to cover some questions as well.
Yeah, we've got a couple of comments that are just coming in now. So, question from Chris. I'm accustomed to discretionary. Actually, let me put it on the screen. I'm accustomed to discretionary trading as breakout traders. Do we pay any attention at all to world events?
I do not, because we have some world events all the time. Like, even if we don't have world events, we had Fed announcements and, these energy inventory reviews. And there's, if I would be preoccupied by these, I couldn't trade, because I would have to think about these fundamental information every single day. And we were in algorithmic trading, we work with statistics, and we deliberately choose a long history for our sample size, because we know such a history already does include all the kind of different crazy, abrupt, random world and economical events. So I do not pay much time to events. I just put attention to volatility. And if I feel like volatility is too high and I feel really uncomfortable, I decrease the overall position. So either I decrease number of contracts, or I decrease exposure in certain market sector, like energies, for example, reducing number of strategies or something like that, which I do quite discretionary based on the heat, psychological heat, and volatility heat. Otherwise, I do not pay much of an attention to events.
Thanks, Thomas. We've got a not a question, but a comment on from Mark. Says that the triple exit with the risk reward ratio and ATR basis was invaluable.
Great.
I agree. Thanks, Mark. And then a second comment here. Van Tharp is famous for saying that exits matter so much more than entries.
Absolutely.
Yeah.
I think it's a combo. I think it's both, actually. But yes, exits are important.
Okay. All right. Well, that looks like we're done for the day. So thank you, everyone, for attending today. We had some great questions and comments in the chat. And thank you again, Thomas, for sharing all your valuable insights. Anything left to add before we finish up, Thomas?
Thank you, guys, for being here. It was a pleasure as always. I love this, our small group here that is always being present on every show. It's great to have you guys here, being small community, and knowing we have fans like you, amazing fans like you. So thank you for being with us. Again, please don't forget to give us a thumb up. It really helps us. And don't forget, if you have any strategy you want us to review on the show, don't forget to send it. We're always happy to review your own work and give you some feedback. So thank you.
Yep, I'm just going to put up a couple of thanks on the screen. Giorgio liked the time sessions. That was a great tip, especially for Crude. Giorgio, so try the extended sessions there. Rob said, thanks, guys. Great show from Chris. Thanks for the question, Chris. It's going too quick for me to keep up now. Giorgio said, thanks. Here's a new name I haven't seen before. Weppy 3D. I don't know what that means, but thank you both. Thanks for attending today. So thank you, everyone. I think I missed a few there, so apologies. I missed Martin, actually, definitely. So thanks again. And any hints for the next show, Thomas? Are we going to continue with the series?
You got me. I don't know yet. I have to think about it. But
So
we will continue. We will definitely continue with the series, that's for sure.
Exactly. So catch us again in 2 weeks' time, and Thomas is going to reveal which markets he's going to dissect next, and we can get a lot of trading tips from there. So thanks again. Thank you, Thomas, and have a great 2 weeks
Thank you,
from
Andrew.
now.
Thank you, guys. Happy trading.
Happy trading.
Bye-bye.